Welcome back. I want to focus on fintech, financial and technology. Square set to report fourth quarter earnings after the close. It is just one company that's driving major change in consumer finance. Other big names include PayPal and Venmo. And now the big banks are catching up. Joining us right now is Canaan general partner Dan Ciporin. Dan, good to see you. Thanks so much for joining us.
Thanks for having me.
Yeah, fintech is interesting to look at because right now you're seeing all these financial services companies acquire technology so that they can have better offerings for the customer. What's going on with that?
Well, look, I think fundamentally banks have a hard time catering to millennials. And that lack of a user experience that millennials really like and enjoy and are used to has led to a big opening for fintechs. And I think that you see, in addition to the user experience piece, you see right now over the last 10 years the democratization of assets that's going on, enabling retail consumers to actually access investments that they haven't been able to access previously. Started 10 years ago with Lending Club, where you were able to now invest directly in consumer loans, not be a large bank that has a credit card program, but put in 1,000, 10,000, millions directly on the platform without any intermediary. And you're seeing the same thing happen in real estate with companies like Roofstock and Realty Mogul. You're seeing the same thing happen in private high-growth companies, like with companies like Circle Up and AngelList. So these are all trends that are really based on democratization of assets. And now you have something brand new coming into place where you have brand new assets, which are crypto assets. And that's something that banks just don't have any idea what to do with. And so I think that really has a tremendous opening for fintechs to enable them to address that segment of the market that banks really haven't. And I think it'll lead fundamentally to acquisitions by banks. I think similar to what's happened in the pharmaceutical industry, where you've had lots of pharma initially putting lots of money in R&D and now taking all that money and buying companies to get innovation into the pipeline. Something similar, I think, will happen in financial services as well.
Well, how do you find valuations right now? We had this big run-up in the overall stock market. Finance came in relatively cheap after the financial crisis. Where are we right now in terms of how overpriced or underpriced financial companies are?
Well, a lot of it depends on the hype cycle, if you will. Dropbox just announced that they were doing an IPO. They've been around for a while. They raised money at a $10 billion valuation privately a little while ago. It'll be interesting to see whether they achieve that or not. But there are a lot of other companies that are going public now that are at lower valuations that haven't been as hyped that are doing very well. We just had one called Cardlytics, which enables banks to essentially operate as Google. They can place advertisements right next to your debit card statement. So if you buy a Burger King, you can have a promotion for a McDonald's right next to it. That company went public last month. It's been up 50%. So these are the kinds of companies not hyped, but real value, real transformation that's taking place in the fintech sector that are seeing real significant momentum in the stock market.
Speaking of hype, let's talk about mania and craze and gambling. Well, you mentioned the cryptocurrencies. Maybe the larger financial institutions aren't moving quickly because they realize the risk. I mean, I look at a Square, for example, and through Square Pay, you can essentially gamble on Bitcoin in fractional shares, and you even hear advertisements across podcasts targeting those very millennials without explaining the risk and really pitching cryptocurrencies not as a currency, but as a scratch ticket, if you will. That's what it sounds like, and I'm old enough to remember the .com craze and other bubbles.
Yeah, I think there is a real issue there. I think that we're in the Wild West right now. Mm-hmm. There's going to be lots of changes that are going to occur, and particularly regulatory ones, I think, over time. And I think that, many of these ICOs are literally nothing but scams. Having said that, I think that there is real validity to what's going on in cryptocurrency right now. A lot of millennials believe in math, not in governments, and they want a currency that speaks to mathematical computation, not government fiat.
So how do the banks catch up to that? How do they? Are they going to be buying crypto companies, or are they going to be issuing their own? What do the big financial institutions do to catch that wave?
Well, I think a lot of it depends on what happens with the regulatory apparatus around crypto and what is going to actually be implemented as far as regulations are concerned. I think banks are going to be very, very careful to get into crypto without having real clarity around what the regulatory apparatus is that surrounds it. What is allowed, what isn't.
And,
Right now,
and the
it's
more
just not
popular
clear.
it gets, we'll see more regulation, I assume. Right?
Absolutely.
This, I think, is where Jay Powell's testimony today, again, is going to be really interesting. What does he have to say about what the Fed's going to do about cryptocurrency?
Absolutely.
And if you say that banks don't know what to do with it, who do you think does know what to do with it? Is there someone that you're looking at and saying they're being really smart about what they're doing?
Well, you have a company like Coinbase that is offering cryptocurrency, and my understanding, and I'm not close to the company, but my understanding is that they've had, literally millions and millions of new applications open over the last 6 months, many more than Schwab ever had, for example. So, over a similar period of time. So you have something that people really want to invest in, which is crypto. There are many issues associated with it. I think the regulators need to come out and be very clear about what's allowed and what's not. I think you need to be very clear about what the risks are that you're taking. I think all those things need to happen, but I don't think crypto is going away. I do think that there's probably a bit of a bubble here. I actually said a few months ago that as soon as Jamie Dimon starts buying, you should sell. And I think that there's some of that that
Has
actually.
the bubble burst, or are we still in bubble territory? Bitcoin's down to
It's
10,000.
come back down 10,000, right?
Yeah.
I think it's very hard to say. I think we'll see a very significant downdraft, similar to what happened in the 2000 era for internet companies in Web 1.0, if you will. Having said that, let's remember what happened there. Things went down very, very far. People considered consumer internet nothing but toxic waste, and now we're in a very different world. And I think, similarly, crypto is going to go through some of the same evolution, and ultimately, I think, is going to be something that is a real asset that people are going to invest in.
So you like it long term?
Long term.
Yeah. Dan, great to see you.
Nice to see
Thanks
you.
so much.
Thank you.
Dan Ciporin joining us there.